Bitcoin, the digital gold revolution. Unveiling the origin, market status, and future of the world's first cryptocurrency. Introduction. In the fast-paced world of digital finance, few innovations have had a greater impact than Bitcoin. Launched in 2009 by the mysterious figure Satoshi Nakamoto, Bitcoin has grown from a niche experiment to a trillion-dollar asset class that has reshaped global financial systems. Bitcoin's decentralized nature, fixed supply, and secure blockchain technology have earned it the title of digital gold, a modern store of value in an increasingly digital economy. But Bitcoin's influence extends far beyond just being a speculative asset. It's a technological revolution, a tool for financial freedom, and a catalyst for reshaping economic power dynamics. This ebook will explore Bitcoin's fascinating journey, from its origins to its current market standing, and provide insights into what the future may hold for this groundbreaking innovation. Chapter 1: The Origin of Bitcoin. The Financial Crisis and the Birth of an Idea. To understand Bitcoin's origin, we must revisit the turbulent economic landscape of 2008. The global financial crisis, triggered by reckless lending practices and institutional failures, exposed deep flaws in traditional banking systems. Trust in centralized financial authorities plummeted, and people sought alternatives to safeguard their wealth. In October 2008, a figure operating under the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This 9-page document outlined a radical idea, a digital currency that operated without intermediaries like banks, relying instead on cryptographic security and decentralized consensus. Satoshi Nakamoto, the mysterious creator. Satoshi Nakamoto's true identity remains one of the greatest mysteries in modern technology. Whether an individual or a group, Nakamoto's influence is undeniable. In 2009, Nakamoto mined the Genesis block, also known as Block 0, embedding a powerful message. The Times, the 3rd of January 2009, Chancellor on brink of second bailout for banks. This message referenced a headline from the Times newspaper, highlighting Bitcoin's mission to offer an alternative to the flawed banking system. Early adoption and Bitcoin's first use case. In Bitcoin's early days, its value was practically zero. Enthusiasts mined Bitcoin on personal computers, largely as an experiment. The first real-world transaction occurred in May 2010, when programmer Laszlo Hanyecz famously purchased 2 pizzas for 10,000 BTC, now worth millions. This event symbolized Bitcoin's transition from a theoretical concept to a functional currency, though mainstream adoption was still years away. The rise of Bitcoin's network. In its early years, Bitcoin's network attracted a passionate community of developers, cryptographers, and libertarians. Its open-source nature allowed anyone to participate, refine, and improve the system. Key developments such as the Bitcoin Improvement Proposals, BIPs, introduced upgrades to scalability, security, and transaction efficiency. As Bitcoin's reputation grew, exchanges like Mt. Gox emerged, providing a platform for BTC to be traded, further cementing its role in the digital economy. Bitcoin's growing reputation. By 2013, Bitcoin had gained significant media attention, driven by both surging prices and controversies. Its association with dark web marketplaces like Silk Road cast a shadow over its reputation, but Bitcoin continued to evolve as a legitimate financial tool. Chapter 2: The Technology Behind Bitcoin. Introduction to Blockchain, the foundation of Bitcoin. At the heart of Bitcoin's success lies its revolutionary technology, the blockchain. This decentralized, tamper-resistant ledger is what enables Bitcoin to function securely without the need for trusted intermediaries like banks. Blockchain is often described as a digital ledger, but it's much more than that. It's a system that records transactions in a transparent, immutable, and decentralized manner, ensuring every participant in the network can trust the data without relying on a central authority. How blockchain works. The Bitcoin blockchain is structured as a chain of data blocks, each containing a list of verified transactions. Here's how the process unfolds. 1. Transaction creation. When a user initiates a Bitcoin transaction, it's broadcast to the network. The transaction includes details like the sender's and receiver's wallet addresses and the amount of Bitcoin being transferred. 2. Transaction verification. Miners, network participants who validate transactions, group pending transactions into a block. Each block is verified using a process called proof of work (POW), an energy-intensive computational puzzle that requires miners to solve complex mathematical problems. 3. Block addition to the chain. Once a miner successfully solves the POW puzzle, the block is added to the blockchain. Each new block contains a reference, or hash, to the previous block, ensuring the chain remains immutable and tamper-proof. 4. Consensus mechanism. Bitcoin's decentralized structure ensures that no single entity controls the network. Instead, a majority of nodes must agree on the validity of each block, creating a system of trust through consensus. The role of mining in Bitcoin. Mining plays a crucial role in Bitcoin's security and coin issuance. Miners compete to solve cryptographic puzzles using computational power, and the first miner to find the solution gets to add the next block to the chain. For their efforts, miners receive a block reward, freshly minted Bitcoin plus transaction fees. This process not only secures the network but also controls the supply of Bitcoin. The halving event. Approximately every 4 years, the Bitcoin block reward undergoes a halving, reducing the number of new BTC entering circulation. This event is crucial because it limits inflation and enforces Bitcoin's scarcity, reinforcing its value as digital gold. Bitcoin's fixed supply, the 21 million cap. One of Bitcoin's most revolutionary features is its fixed supply limit of 21 million BTC. Unlike traditional currencies that can be printed indefinitely, Bitcoin's supply is hard-coded to ensure scarcity. This finite supply mirrors precious metals like gold, giving Bitcoin its reputation as a store of value. As more coins are mined, the available supply shrinks, potentially driving demand and value upward. Security and immutability. Bitcoin's security is built on powerful cryptographic principles. Each transaction is digitally signed using private keys, ensuring only the rightful owner can authorize a transfer. Furthermore, the decentralized nature of the network means there's no single point of failure. For a malicious actor to alter Bitcoin's blockchain, they would need to control over 51% of the total network hash power, which is highly unlikely given the network's size and complexity. Bitcoin wallets, storing and managing BTC. To participate in the Bitcoin ecosystem, users rely on wallets, digital tools that store private keys and enable transactions. There are several types of wallets. Hot wallets, online wallets that are convenient but more vulnerable to hacks. Cold wallets, offline wallets that offer enhanced security for long-term storage. Hardware wallets, physical devices that store keys securely, ideal for safeguarding large amounts of Bitcoin. Each wallet type has trade-offs between security and convenience, allowing users to choose what best suits their needs. Bitcoin's strengths as a technology. Bitcoin's blockchain offers several key advantages. Decentralization. No central authority controls Bitcoin, making it resistant to censorship. Security. The POW consensus mechanism and cryptographic design ensure robust protection. Transparency. Every transaction is recorded on a public ledger, promoting trust. Immutability. Once data is added to the blockchain, it cannot be altered. These features have positioned Bitcoin as not just a currency, but a revolutionary financial tool with far-reaching implications. Conclusion. Bitcoin's underlying technology, its blockchain, mining system, and cryptographic security, is what makes it resilient, transparent, and decentralized. This robust design is key to why Bitcoin has maintained trust and growth over the years. Chapter 3. Bitcoin's market journey, from obscurity to global dominance. The early days, Bitcoin's struggle for recognition. When Bitcoin launched in 2009, its value was effectively zero. With no established market or exchange, Bitcoin existed as an experimental concept discussed mainly in cryptography forums. Enthusiasts mined BTC for fun, seeing it more as a technological curiosity than a financial asset. The first recorded price for Bitcoin appeared in October 2009, when one BTC was valued at $0.0008 on an early exchange. This valuation was largely arbitrary, driven by speculative interest rather than real-world demand. The first boom, Bitcoin breaks the $1 mark. Bitcoin's first significant milestone came in February 2011, when it achieved parity with the US dollar. This symbolic moment caught the media's attention, sparking curiosity among tech-savvy investors. By June 2011, Bitcoin's price surged to $31, a 3,000% increase in just 6 months. However, this meteoric rise was followed by a sharp crash, plunging BTC back to $2 by the end of the year. This volatility would become a defining feature of Bitcoin's market journey, soaring rallies followed by deep corrections. The Mt. Gox era. Triumph and collapse. In 2013, Bitcoin's market growth accelerated as demand surged. The Japanese exchange Mt. Gox handled over 70% of global Bitcoin transactions, becoming the dominant trading platform. Bitcoin's value peaked at $1,200 in November 2013, establishing itself as a significant digital asset. However, Mt. Gox's dominance proved disastrous. In February 2014, the exchange filed for bankruptcy after losing 850,000 BTC, worth $450 million at the time, in a massive security breach. This event shook confidence in the crypto industry, reinforcing concerns about Bitcoin's security and stability. The 2017 bull run, Bitcoin enters the mainstream. Bitcoin's most iconic bull run came in 2017. Fueled by rising adoption, media coverage, and speculative interest, Bitcoin's price skyrocketed from $1,000 in January to $20,000 in December. This surge brought Bitcoin into the mainstream, attracting both retail and institutional investors. However, the rally was accompanied by hype-driven mania, and Bitcoin's value fell by over 80% in 2018 as the bubble burst. The institutional wave, Bitcoin's rise as digital gold. By 2020, Bitcoin had earned a new reputation, not just as a speculative asset, but as a store of value akin to gold. Global economic uncertainty during the COVID-19 pandemic triggered renewed interest in Bitcoin as a hedge against inflation. Major institutions like MicroStrategy, Tesla, and Square began adding Bitcoin to their corporate treasuries. Meanwhile, financial giants like PayPal and Visa integrated Bitcoin into their payment ecosystems, boosting credibility. By November 2021, Bitcoin hit an all-time high of $69,000, solidifying its status as a mainstream financial asset. Market corrections and volatility. Despite its success, Bitcoin's volatile nature persisted. After its 2021 peak, Bitcoin's price faced corrections due to regulatory pressures, rising interest rates, and reduced investor sentiment. By mid-2022, Bitcoin had retreated to around $20,000, highlighting its unpredictable price swings. However, Bitcoin's supporters argue that such volatility is natural in emerging technologies, especially one challenging the traditional financial system. Bitcoin's role in the modern financial system. Bitcoin's market journey has transformed it from an obscure digital experiment into a powerful financial tool. Today, Bitcoin is viewed in multiple ways. A store of value, with its fixed supply and decentralized design, Bitcoin is often called digital gold. A medium of exchange, while less efficient than some newer blockchains, Bitcoin remains a functional payment system in regions with unstable financial systems. A hedge against inflation, Bitcoin's scarcity makes it an appealing option for investors seeking to protect wealth from monetary debasement. Key market trends shaping Bitcoin's future. Several trends continue to shape Bitcoin's market position. 1. Institutional investment. As more financial institutions adopt Bitcoin, its role as a legitimate asset class continues to strengthen. 2. Regulation. Global governments are working to regulate cryptocurrency markets, which may boost Bitcoin's legitimacy but also introduce challenges. 3. Global economic uncertainty. Bitcoin's reputation as a hedge asset may continue to grow during economic downturns or inflationary periods. 4. Layer 2 solutions, e.g., Lightning Network. Enhancements like the Lightning Network are improving Bitcoin's scalability and transaction speeds, expanding its use as a payment system. Conclusion. Bitcoin's market journey has been defined by cycles of explosive growth, sharp corrections, and increasing adoption. Despite volatility, Bitcoin's resilience and growing recognition as digital gold suggest a promising future in global finance. Chapter 4. The Future of Bitcoin, Opportunities and Challenges. Bitcoin's evolution, from digital currency to global asset. Bitcoin's journey has already defied expectations, from a niche idea in cryptography circles to a trillion-dollar asset class. As the digital economy continues to expand, Bitcoin's role is evolving beyond just a speculative investment. Its future holds exciting opportunities, but also significant challenges. In this chapter, we'll explore Bitcoin's potential future, examining its place in decentralized finance, DeFi, emerging trends, and possible obstacles. 1. Bitcoin's role in decentralized finance, DeFi. While Bitcoin itself isn't designed for smart contracts like Ethereum, innovative solutions are integrating BTC into the DeFi ecosystem. This is unlocking new possibilities for lending, borrowing, and yield-generating services. Wrapped Bitcoin, WBTC, by tokenizing Bitcoin on the Ethereum blockchain, BTC holders can participate in DeFi protocols while maintaining exposure to Bitcoin's price. Rootstock, RSK, the smart contract platform is built on top of Bitcoin, combining Bitcoin's security with Ethereum-like functionality. As DeFi continues to grow, Bitcoin's role as a foundational asset within decentralized ecosystems is likely to expand. 2. Bitcoin's increasing role in payments. While Bitcoin's original vision was to serve as a peer-to-peer electronic cash system, its slow transaction speeds and high fees limited its use for everyday payments. However, advancements like the Lightning Network are addressing these issues. Lightning Network, a second-layer solution that enables instant, low-cost transactions by creating payment channels off-chain. This innovation is helping Bitcoin regain momentum as a practical payment method. Merchant adoption. Platforms like Strike and BitPay are simplifying Bitcoin transactions for businesses, driving broader adoption. Countries like El Salvador have even adopted Bitcoin as legal tender, signaling its potential for everyday commerce, especially in regions with unstable currencies. 3. Institutional adoption and Bitcoin ETFs. Institutional investors are increasingly viewing Bitcoin as a legitimate asset class. This shift is driven by its potential as a hedge against inflation and its uncorrelated nature compared to traditional markets. Bitcoin ETFs, exchange-traded funds, regulated Bitcoin ETFs are making it easier for investors to gain exposure to Bitcoin without directly holding the asset. This trend is accelerating mainstream adoption. Corporate investment. Major companies like MicroStrategy have incorporated Bitcoin into their balance sheets, reinforcing its value as a strategic financial asset. As regulatory frameworks become clearer, institutional investment in Bitcoin is expected to rise. 4. Bitcoin is a global reserve asset. Some advocates believe Bitcoin could one day become a global reserve currency, similar to gold. Its decentralized nature, fixed supply, and borderless accessibility make it appealing as a universal store of value. While this vision remains speculative, Bitcoin's increasing role in cross-border trade and wealth preservation highlights its potential as a financial anchor in a digital economy. 5. Environmental concerns and sustainability. Bitcoin's proof-of-work (POW) mining model has faced criticism for its energy consumption. Critics argue that mining's environmental impact could hinder Bitcoin's growth. However, the industry is adapting. Transition to renewable energy. Many mining operations are moving toward renewable sources like hydro, solar, and wind to reduce their carbon footprint. Mining efficiency improvements. Advancements in hardware and mining techniques are enhancing energy efficiency. While environmental concerns remain a challenge, Bitcoin's evolving mining practices are improving sustainability. 6. Regulatory challenges and legal landscape. As Bitcoin gains mainstream attention, governments worldwide are introducing regulations to govern its use. While clear regulations can improve investor protection and boost trust, overly restrictive policies could hinder innovation. Key regulatory considerations include taxation policies. Governments are increasingly focusing on taxing crypto transactions. AML, anti-money laundering, rules. Stricter compliance requirements may impact privacy-focused Bitcoin use cases. Global coordination. Differing regulatory approaches across countries may create uncertainty for investors and businesses. Navigating these regulatory challenges will be crucial for Bitcoin's long-term growth. 7. The role of Bitcoin in financial inclusion. Bitcoin's decentralized nature makes it a powerful tool for empowering individuals in economically unstable regions. With minimal infrastructure required, Bitcoin offers access to digital payments. Bitcoin enables users in underbanked regions to send and receive value globally. Wealth preservation. In countries with severe inflation or political instability, Bitcoin offers a secure way to store wealth. By providing financial autonomy to millions, Bitcoin has the potential to reduce economic inequality. 8. Technological advancements and innovation. The Bitcoin protocol itself continues to evolve through upgrades and improvements. Taproot upgrade, introduced in 2021, Taproot enhanced Bitcoin's privacy, scalability, and smart contract functionality. Layer 3 solutions. Future innovations may improve Bitcoin's interoperability with other blockchain networks, expanding its use cases. These developments are strengthening Bitcoin's position as both a secure financial asset and a foundation for innovative solutions. 9. Bitcoin's cultural impact and community growth. Beyond finance, Bitcoin has influenced global culture. Movements like the Bitcoin Standard promote economic independence, while crypto communities worldwide are driving grassroots adoption. The concept of holding Bitcoin long-term despite volatility has become a cultural symbol of belief in Bitcoin's future value. Conclusion. The road ahead for Bitcoin. Bitcoin's future is shaped by a combination of technological advancements, regulatory developments, and shifting market dynamics. While risks like volatility and environmental concerns remain, Bitcoin's core strengths, scarcity, security, and decentralization continue to drive its adoption. Whether Bitcoin evolves into a global reserve asset, a dominant payment system, or a niche store of value, its impact on global finance is undeniable. As digital economies grow, Bitcoin's role as digital gold may become more significant than ever. Conclusion. The Bitcoin revolution and its lasting impact. Bitcoin's journey from an obscure idea in a cryptography mailing list to a trillion-dollar asset has been nothing short of extraordinary. Over the years, it has evolved from a niche digital currency into a powerful symbol of financial independence, decentralization, and innovation. At its core, Bitcoin is more than just a form of money, it's a technological breakthrough that challenges the foundations of traditional finance. Its fixed supply, decentralized network, and borderless nature have redefined how we perceive value, ownership, and trust in the digital age. Key lessons from Bitcoin's rise. 1. Scarcity creates value. With a capped supply of 21 million BTC, Bitcoin's scarcity has driven its reputation as digital gold, a hedge against inflation and economic uncertainty. 2. Decentralization empowers individuals. By removing intermediaries, Bitcoin has empowered millions worldwide with financial autonomy, especially in regions with unstable economies. 3. Innovation drives adoption. Advancements like the Lightning Network and Taproot upgrade continue to improve Bitcoin's scalability, privacy, and functionality. 4. Volatility is part of growth. Bitcoin's price history reflects cycles of intense speculation, correction, and recovery, a natural pattern in emerging technologies. Bitcoin's potential future. Bitcoin's potential to become a global reserve asset, a vital part of decentralized finance, or a mainstream payment system remains a hot topic of debate. Regardless of which path it takes, Bitcoin's influence on digital finance is undeniable. For those who believe in its vision, Bitcoin represents more than just financial gain, it's a movement toward a more transparent, inclusive, and decentralized economic future. Final thoughts. Whether you are a seasoned investor, a curious newcomer, or a tech enthusiast, understanding Bitcoin is crucial in today's digital economy. Its impact continues to unfold, and those who grasp its significance will be better prepared for the evolving landscape of global finance. Bitcoin's story is far from over. It's still being written with every block mined, every wallet created, and every individual who chooses to participate in this financial revolution. Key takeaways. Bitcoin's origin. Born out of the 2008 financial crisis, Bitcoin emerged as a response to centralized financial control. Technological impact. Blockchain's transparent, immutable structure ensures Bitcoin's security and trust. Market influence. Despite volatility, Bitcoin's long-term value growth highlights its increasing adoption. Future outlook. With ongoing innovations and institutional support, Bitcoin's potential as digital gold remains strong. Facts. Frequently asked questions about Bitcoin. 1. What is Bitcoin? Bitcoin is a decentralized digital currency that operates without a central authority like a bank or government. It was created by an anonymous individual or group known as Satoshi Nakamoto in 2009. Bitcoin transactions are verified through a process called mining and recorded on a public ledger known as the blockchain. 2. How does Bitcoin work? Bitcoin uses blockchain technology to ensure secure and transparent transactions. Each transaction is recorded in a block, linked to the previous block, forming a chain. Miners use computational power to solve complex puzzles that validate transactions and add new blocks to the chain. 3. Why is Bitcoin often called digital gold? Bitcoin is often compared to gold because it has a limited supply, 21 million coins, making it scarce. This scarcity, combined with its decentralized nature, has led many investors to view Bitcoin as a store of value, similar to gold, especially during times of economic uncertainty. 4. Is Bitcoin safe? Bitcoin's blockchain is highly secure due to its decentralized structure and cryptographic design. However, users must take personal security seriously by using reputable wallets, enabling two-factor authentication 2FA, safeguarding their private keys and seed phrases. While Bitcoin itself is secure, exchanges and third-party platforms can be vulnerable to hacking. 5. Can I lose my Bitcoin? Yes, losing access to your private keys or wallet recovery phrases can result in permanent loss of your Bitcoin. There's no centralized authority to help recover lost funds, so securing your wallet is crucial. 6. How can I buy Bitcoin? To buy Bitcoin, choose a reputable cryptocurrency exchange, e.g., Coinbase, Binance, Kraken. Create an account and complete any required identity verification. Deposit funds via bank transfer, credit card, or P2P platforms. Purchase Bitcoin and store it in a secure wallet. 7. What is a Bitcoin wallet? A Bitcoin wallet is a digital tool that allows users to send, receive, and store Bitcoin securely. Wallet types include hot wallets, connected to the internet, e.g., MetaMask, Trust Wallet. Cold wallets, offline storage for maximum security, e.g., Ledger, Trezor. Cold wallets are recommended for long-term storage to minimize hacking risks. 8. What are Bitcoin mining and miners? Mining is the process by which new Bitcoin is created and transactions are verified. Miners use powerful computers to solve complex mathematical puzzles. In return, they receive BTC rewards and transaction fees. Bitcoin's mining model, proof of work, ensures network security but requires significant energy consumption. 9. Is Bitcoin legal? Bitcoin's legal status varies by country. In nations like the United States, Canada, and the European Union, Bitcoin is legal and regulated. Some countries, like China, have imposed strict restrictions or bans on Bitcoin trading and mining. Always check your local regulations before buying or using Bitcoin. 10. What are Bitcoin's biggest risks? Key risks include volatility. Bitcoin's price can experience extreme fluctuations. Regulatory uncertainty. Governments may impose stricter rules on crypto markets. Security risks. While the Bitcoin network itself is secure, poor personal security practices can lead to loss. Environmental concerns. Bitcoin mining consumes significant energy, raising sustainability concerns. 11. How is Bitcoin different from other cryptocurrencies? Bitcoin differs from other cryptocurrencies in several key ways. First mover advantage. Bitcoin was the first cryptocurrency, giving it greater recognition and trust. Fixed supply. Bitcoin's capped limit of 21 million coins makes it deflationary. Security focus. Bitcoin prioritizes security over complex features like smart contracts. While coins like Ethereum offer more flexibility for decentralized applications, dApps, Bitcoin remains the most widely recognized and adopted digital asset. 12. Can Bitcoin be used for everyday payments? Yes, Bitcoin can be used for payments, but due to slower transaction speeds and fees, it's less practical for small purchases. However, the Lightning Network significantly improves Bitcoin's scalability, enabling faster and cheaper transactions. 13. What drives Bitcoin's price? Bitcoin's price is influenced by several factors. Supply and demand. With only 21 million BTC available, scarcity drives value. Market sentiment, media coverage, hype, and news influence investor behavior. Institutional adoption. Growing interest from companies and financial institutions impacts demand. Regulatory changes. Legal decisions can cause major price swings. 14. Can I earn passive income with Bitcoin? Yes, several methods allow Bitcoin holders to earn passive income. Staking BTC via wrapped tokens like WBTC in DeFi. Lending BTC on crypto platforms. Participating in Bitcoin mining, though this requires technical expertise and equipment. 15. Is Bitcoin a good investment? Bitcoin's long-term performance has shown significant growth, but it remains a volatile asset. As with any investment, conducting thorough research and understanding the risks is crucial. Bitcoin is often seen as a high-risk, high-reward investment suited for long-term holders. 16. What happens when all 21 million Bitcoins are mined? Once all 21 million BTC are mined, estimated by 2140, miners will no longer receive block rewards. Instead, they'll rely on transaction fees for their earnings. This shift may incentivize efficiency improvements and further development of Bitcoin's infrastructure. 17. What is a Bitcoin halving event? A Bitcoin halving occurs roughly every 4 years, reducing the mining reward by 50%. This process slows the release of new BTC, contributing to its scarcity. Halving events are historically linked to significant price increases due to reduced supply. 18. Can Bitcoin be hacked? The Bitcoin network itself is highly secure, with no known successful attacks. However, individuals and exchanges can be vulnerable if they fail to implement strong security practices. 19. How can I protect my Bitcoin? For maximum security, use cold wallets for long-term storage. Enable two-factor authentication, 2FA, on exchanges. Avoid sharing your private keys or seed phrases with anyone. Regularly update your security software. 20. Where can I learn more about Bitcoin? To stay informed about Bitcoin and cryptocurrency trends, follow trusted websites like CoinDesk, Cointelegraph, or Bitcoin.org. Join Bitcoin-focused communities on platforms like Reddit or Twitter. Explore educational resources like podcasts, YouTube channels, and books written by cryptocurrency experts.